Episode 3: Investing in Bitcoin, ETFs, and Treasury Companies. Welcome back to From Shells to Satoshis, the podcast where we break down how money has changed from ancient times to the digital age. In Episode 2, we talked about how Bitcoin rose out of the 2008 financial crisis and why it earned the nickname digital gold. Today, in Episode 3, we're going to look at something more practical. How do you actually invest in Bitcoin? And why are huge companies putting billions of dollars into it? If you ever opened a crypto exchange or watched a YouTube tutorial about buying Bitcoin, you know it's not as simple as downloading a stock trading app and tapping buy. When you buy Bitcoin directly, you have to deal with crypto exchanges, digital wallets, and send phrases and Bitcoin keys. And if you lose your private key, well, your Bitcoin is gone forever. There's no password reset, no customer support line, no oops button. This is one of the biggest reasons regular investors have avoided Bitcoin for years. Not because they didn't think Bitcoin was interesting, but because the process seemed confusing and risky. Wallets, keys, or codes, the fear of losing everything by one mistake kept a lot of people away. But in the last couple of years, that changed. A new investment option appeared that lets people get exposure to Bitcoin without having to download crypto app or memorize a 24 seed phrase. And it changed everything. Enter Bitcoin ETFs, exchange traded funds that hold actual Bitcoin. These ETFs let you buy Bitcoin through normal investment platforms like Fidelity, Robinhood, Charles Schwab, or whatever brokers you use. Here's how it works. The ETF company, like BlackRock or Fidelity, buys real Bitcoin and stores it safely. Then they issue shares of a fund that represent that Bitcoin. When you buy a share of the ETF, you're basically owning a slice of actual Bitcoin they hold in custody. You just buy a share the same way you would buy a share for Tesla or Apple. These funds exploded in popularity because they made Bitcoin seem normal and accessible. You can hold them in retirement accounts, college saving plans, or a regular brokerage account, places where traditional Bitcoin wasn't even possible before. The turning point came in early 2024 when the US Securities and Exchange Commission officially approved Bitcoin ETFs. This was huge. For years, the SEC rejected these ETF applications because they weren't convinced the Bitcoin market was safe or mature enough. But after a decade of debate, research, and court cases, the SEC finally said yes. This approval did two important things. It gave Bitcoin mainstream credibility. When the biggest financial regulators in the world approve something, investors feel more confident about it. It opened the door for millions of investors. Suddenly, anyone with a retirement account or basic brokerage app could get exposure to Bitcoin instantly. Because of this, billions of dollars poured into Bitcoin ETFs in the first few months. BlackRock's ETF became one of the fastest growing ETFs in history. Major investment firms started recommending Bitcoin as part of diversified portfolios. And for the first time, Bitcoin wasn't only for tech people or crypto experts. It was for everyone. But ETFs aren't the only way people invest in Bitcoin. Some public companies are going even further. Instead of just letting investors buy Bitcoin through their ETF, these companies actually hold and buy Bitcoin themselves. These are called Bitcoin Treasury companies, meaning Bitcoin is a part of their corporate balance sheet, just like cash, buildings, or equipment. The most famous example by far is Strategy, led by CEO Michael Saylor. Strategy doesn't mine Bitcoin or build crypto products. It's actually a business software company. But over the past few years, they've turned themselves into the largest corporate holder of Bitcoin in the world. Right now, MicroStrategy holds over 600,000 Bitcoin. That is an insanely large number. It's more Bitcoin than held by most countries. But MicroStrategy isn't alone. Other companies holding Bitcoin include Tesla and Black, formerly Square. And more companies are joining this year and every year. So why are businesses doing this? Why not just sit on cash like most companies? The simple answer is inflation. Over time, the purchasing power of cash goes down. A dollar today buys less than a dollar 10 years ago. And as government print more money, that purchasing power continues to erode. Some companies believe Bitcoin solves this problem. Bitcoin supply is fixed at 21 million coins. It can't be inflated or printed. So in an inflationary world, these companies see Bitcoin as a long-term store of value, something that might protect their balance sheet better than cash. Michael Saylor even described Bitcoin as economic immortality for companies because the asset can't be weakened by inflation. But here's where things get interesting. Some companies aren't just holding Bitcoin as a treasury asset. They're actually using it to build new financial instruments, tools that challenge traditional banking and payment systems. They're creating Bitcoin-based financial services that could redefine how people save, borrow, and transfer money. And that's exactly what we are diving into in episode 4.